Now, Uber is one of the most discussed companies on the stock market, and the most important question for this company moving forward into 2020 and 2021 will be, when are you profitable, Uber? Now, Uber stated for a long time that there's a clear path for profitability, but it was apparently not so clear for the investors on Wall Street, and therefore the stock, since the IPO, is on a great ride. Now, in the Q4 earnings that was just released, they announced that they will reach profitability already in Q4 2020, so end of this year, rather than in 2021, which was a big surprise and positive surprise. And there's also other surprises in the earnings report of Uber, and all about it here in this vlog.
Wolf of Dubai.
Okay, first of all, let's deep dive some numbers here. Now, loss per share was 64 cents versus 68 expected. Now, this is obviously the first number that pops into our eyes. That is quite positive. Now, on the other hand, they also did a slightly more revenue, 4.07 billion versus 4.06 billion. And the next number is very important because this shows you that Uber stock is a growth story intact, apparently. This also surprised me because if you're looking into growth companies, the growth rate over year can be somewhere between 10, 20, 30%. Like, for example, Amazon is growing around 30% on average. And then you have companies like Tesla growing 50% on average. And then you have companies like, for example, Beyond Meat, new fresh companies. They are growing 200, 300% in revenue year over year, because obviously this jumps of, let's say, 10 to 20 million in revenue is quite fast to make for such a smaller companies, rather for companies that are making already billions, and from 3 billions to 6 billions is a totally different game. Now, the Uber revenue growth was just confirmed with 37% versus 30%, so almost about 1/3 more than before, and this is absolutely stunning. And also the number that they are forecasting to have as a loss in the middle range in terms of earnings for 2020, which is $1.35 billion, which seems to be huge. But now listen to what is expected, $2.83 billion. This means that they are expecting half the loss that is expected on Wall Street for moving forward in 2020. This is really good. This is good numbers. And if we are going into earnings, it's always what the market expect versus what the company deliver. And there's always a game. And if the company over deliver, which is in different ways of life always a good thing to do, and then the stock price go up. And before going into the stock price, I can tell you that this stock went up almost 10% after this earnings number. So congratulations to all Uber stock investors out there. Now you see, and this is one of my bear cases, that I believe that the ride-sharing business is soon peaking up, because in the end there's technology revolution with self-driving cars coming very fast, and also everybody using ride sharing already, and there's new players to the market out there. And as you can see from the growth numbers of the core business of Uber is just 18%, and also the revenue was a little bit less, or the gross bookings was a little bit less than expected, with 13.51 billion versus 13.6 billion. So the main core revenue stream for Uber is not growing that fast like the overall company, and also actually delivered less in gross bookings than expected. So keep this in mind. Now, however, Uber is trying to keep keep on with this change of the core business. They have the enterprise product, which is something that is quite interesting. They're offering it for companies to use the Uber services for the employees. They are trying to expand the operations in different countries. They have also the Jump product, which is, expanding very much with electric bikes. Also, they are trying to, revive this ride-sharing business. They want to be the ride-sharing Amazon. Whenever you need to go from A to be, then the first thing that you should do, as per the vision of Dara, the CEO, is to open the Uber app. Now, I can imagine that this is a very tough thing to challenge here, because Uber was this upstart that just unbelievably changed transportation and fight so many countries, regulations out there to disrupt the taxi business, and with just software and great management and execution worldwide. Now, on the other hand, you see that this is picking up and they see where they can deliver. Speaking about deliver, they are really try to grow their delivery business of food delivery business is quite big for Uber still, and it's still also one of the biggest growth markets for Uber out there. However, I believe that they should definitely look into the changes coming to ride sharing, especially with autonomous cars, and this is something that actually we will talk about in the conclusion of the stock, if Uber can survive the new upcoming revolution. Now let's go into the Uber stock. Now the Uber stock was an amazing ride for some people. After the IPO, the company went in one direction, which was up. Now in May, we can see the stock started at $41 per share, went up to even 46, so more than 10% increase. Then took a bit of beat until falling in August to a deep hole where its end and bottom up at around $26. This was around November, mid-November, and then since then the stock could rebound 56%, which is unbelievable. I mean, I wouldn't expect that this stock can bounce so back. Compared to previous valuation, obviously the Uber stock was quite cheap with this $26 compared to the 46 and its peaks, but still the market cap is quite heavy with almost $70 billion. This is half of Tesla. I remember my very first video here on this vlog, so maybe you should subscribe, was when Uber was around $80 billion market cap and Tesla was like 38, and I said, hey guys, Tesla is so much more worth, and you see Tesla tripled or even quadrupled in value since then, and Uber lost a lot. Now let's dive into the other things here I want to discuss with you on the vlog, which is the conclusion, how to move forward on this stock. As I said in the very beginning of this vlog, the most important question that I try to answer is when this company will be profitable and how we will move on from there. Now, once Uber is profitable for a couple of quarters and moving on from there, they have a very good chance to be included into S&P 500, which should then give them another push. And also the main question will be if they can do it in the timeline. If they miss this timeline, this is very important, then it can go again very much down for the stock, and the management will be definitely crucified everywhere when they cannot make this company profitable in this timeline, which is quite challenging. I have to tell you that big respect for the Uber management to give this guidance why they could sit on their comfort pillow and say, we will be profitable in 2021, but they moved this date further to Q4 in 2020, and therefore I big respect to Dara and his team to move this way. Now, there's one very big thing that I believe that the Uber stock is nothing for me, because I believe that their business model can be quite disruptive. Same with the traditional car makers. I think this will be the two big disruptions happening in the next couple of years, when Google, for example, with Waymo, or other big software companies will come out with self-driving cars and the service of having the car as service. Then I think Uber will have a really big trouble, because they don't own any hardware as well as any software. So this will be quite challenging, though I will closely watch this stock, because this is one of the interesting stories, successful stories on Wall Street. And of course, as startup, this is one of the most beautiful thing, seeing the company growing. And actually the ex-CEO Travis Kalanick and founder of Uber just missed out with this gain of the stock about $1 billion in profit. So, you know, sometimes it works, sometimes it's not. However, I will forward look to further developments in Uber, and you should too.